Okay, let's get started. Welcome to the BQE Business Breakdown. Before we get started, I just want to remind all participants the purpose of this presentation is for informational and educational purposes only and should not be construed as recommendation to purchase or sell any security. MicroCap Club is not a registered investment advisor. MicroCap Club, its partners, members, subscriber, and affiliates may or may not hold positions in one or more of the securities mentioned on this program and may trade in such securities at any time. Do your own due diligence and seek counsel from a registered investment advisor before trading any security. I want to thank the MicroCap Club community for tuning into this Business Breakdowns conversation with David Kratochvil, the president and CEO of BQE Water. My tag team partner for this Business Breakdowns is Mathieu Martin. Mathieu is currently a portfolio manager with Rivemont Investments and their MicroCap fund. Mathieu has been a MicroCap Club member since 2015, so we're approaching a decade of membership here. If you're interested in learning more about Mathieu, we will put a link in the show notes with an interview with him and a link to his work. Mathieu, it's an honor to have you on this Business Breakdown. Welcome.
Thanks, Adam. It's my pleasure to be here.
The business we are breaking down today is BQE Water, which trades on the Toronto Venture Exchange under the symbol BQE.V, along with the OTC markets under the symbol BTQNF. BQE was originally profiled in March of this year by Phil Lapointe. Hope I'm saying that correctly. BQE is a niche service provider specializing in water treatment and management for metals and mining. The company helps to transform the way the industry thinks about water in the context of natural resource projects by offering services and expertise that enable more sustainable water management practices. BQE has developed unique intellectual property and holds patents for niche water treatment needs and is a sole source provider on more than half of its projects. The company has grown its recurring revenues in terms of operational contracts at a 33% CAGR over the last 5 years, while being profitable the entire time. And they have a strong pipeline of projects that should contribute to continued growth over the medium to long term. BQE could be considered a pick and shovel play on the mining industry. David, thank you for joining us today.
Well, it's a real pleasure to be here, and thank you very much, Mathieu and Adam, for organizing this session.
Before we get into the presentation, David, it looks like you've been in the water business or water treatment business for over 20 years now. A stint of which was previously with BQE. I'd love to just get your background in your own words in the industry and your path to BQE, and then maybe back again to current day.
Yeah, so I'm a chemical engineer by training, and I guess my entire career, professional career almost, has been spent in this sector of mine water management and treatment. I completed my PhD at McGill in bioabsorption of heavy metals, and that really linked me to the mining industry needs of removing heavy metals from water, and then briefly got into a consulting business that later on, the company I worked for, Rescan Environmental, got sold to a large multinational ERM consulting business. And at one point, I started, as part of this consulting gig, one of my clients was a small private startup called Biomet Mining, and they had an interesting technology for generating hydrogen sulfide gas from sulfate that's contained in mine water and actually recovering selectively metals of value from wastewater. And I guess as the years went by, I found that company became basically responsible for more than half of my time consulting. And so at one point, they made me an offer to join. And that company went through a qualifying transaction and went public in the year 2000. I became Biotech Environmental, and I joined the company in February 2000. So I've been really with this company since inception, and in this business for this long. And obviously that company has gone through iterations of business models, and we changed the name of the company in 2015, I should say. On this call with me is the executive chairman, Peter Gleeson, as well as our CFO, He-Man Wong, also available to help answer any questions. And I think we changed the name to BQE Water in about 2016, 2015, I think. Yeah. So I don't know if that's enough about my background, but happy to answer any further questions on that.
Excellent. Look forward to hearing a lot more. Let's now go through your presentation. As a reminder to the audience, if you have any questions, you can ask them by clicking the Q&A button at the bottom of the Zoom screen and entering them in the box. David, I'll turn it over to you. The floor is yours.
Okay, great. Thank you very much. So again, this is just a high-level overview, and happy to answer any questions from the floor. Again, this is not a presentation to advise on any investments in the company or in general in the sector. Just be mindful of that. And as Adam introduced us, BQE Water really is a specialist a service business in the sector of mine water treatment and management. And our mission really is to help make natural resource projects more sustainable and meet not only environmental regulations, but also the criteria for social acceptability, which we believe is really the primary driver these days, over and above the letter of law or the environmental compliance regulations. So BQE Water has been around for, as I mentioned, I joined the company in the year 2001. So we've been around for a while. And through the existence of the company, we've built 30 treatment plants globally around the world. We've successfully commercialized 4 technologies. We're currently treating and discharging into environment over 20 million cubic meters of water every year. And in the process of treating that water, we recover, give or take, 4,000 tons of value metals, mostly copper, zinc, some nickel, and cobalt. We also recover cyanide for recycling in the precious metals mining sector. And literally in 100% of our projects, we somehow either reduce the waste that's being generated, or we completely eliminate it. We have several projects that completely eliminated waste production, where you normally clean the water stream, but you generate some kind of waste residue. And in some cases, we completely eliminate the generation of that waste residue. For some of you who are not familiar with the issues of water in mining, water really intersects all the major aspects of the business. You need water for production. Over 90% of metal extraction and processing happens in water. There are tough regulations that are getting tougher and tougher. And for example, contaminated water, that water that comes into contact with the rocks, minerals, chemicals that are being used, that's contaminated, well, that's considered a liability, has to be cleaned. And even storage of that contaminated water is now considered a liability. The image there on the government regulation side of the pie is the failed Mount Polley Dam in BC that basically failed because they were storing too much water in the tailings dam that they couldn't discharge because of the tough regulations. And finally, social sustainability and acceptability is a big aspect here. You see the double-headed trout image below, and that's really a result of long-term selenium exposure, chronic toxicity caused by selenium. So really, the aspects of water intersect all the pillars of the of the mining business, and are one of the main drivers for either social acceptance or rejection of mining projects these days. When you think about BQE Water, I'd like you to think about us as a company that can broadly help the industry with any water issue, but we have specialized expertise and unique expertise and IP in certain specific areas that truly no one else has in the sector. And those are highlighted here on the left. So they would be broadly in 4 buckets. One would be cyanide, either destruction or recycle. We literally have probably, I would say now, 90% of the recycling business of cyanide globally. People would come to us for that expertise. On the metal side, we have technologies, the one that the company started in 2001 for selective recovery. That's still there. We also have the metal removal processes that really meet the very low stringent levels for regulatory discharges. So not just recovery, but discharge. And then an area of sulfate and crucially, selenium. That's the latest addition to our IP portfolio. And when you look at, our diversification in terms of the projects in our pipeline, you can see that selenium accounts for roughly, now it's probably close to 1/3 of our business. Cyanide recycling, sulfate, again, probably combined would be another 1/3 or more. And then you have metals that we're dealing with and other projects. So it's not that our company is purely about metals. It's not purely about selenium. It's not purely about cyanide. It's quite well diversified. And, in the other is literally anything that can be in the water. As I mentioned, we are not just going after projects with specific contaminants. We're managing broadly waters that are generated by these mining projects. So basically well-rounded specialist in the area. What makes us unique is also our business model. So we're a service provider, and the services really fall into kind of 3 categories. We either have what we call technical services, where we act as the trusted advisor to the mining companies on all aspects of water, including permitting, including laboratory testing for treatability, piloting, demonstration on site, engineering services for the design of these facilities, including, pre-feasibility, bankable feasibility, etc. Once the facility is built, then we provide ongoing operation services. So that's the piece that generates the recurring revenue from plant operations. I want to emphasize that we don't own these facilities. The physical asset is owned by the mining company. So the company, we as BQE Water, we do not invest our own cash into the projects. And then we have what I call technical innovation, which is really not a specialized service. It's basically combining the operations and the consulting or the trusted advisor technical services, in a sense that the operations themselves are a never-ending source of what I would call sustaining innovation, because it's through the operations, ongoing operations of treatment plants, that we learn what works, what doesn't work, how we improve and make our designs better next time. And the consulting services up front, sometimes we start providing these services, let's say, 5, 7, 8 years before the project actually goes into construction. So there is lots of time to develop a treatment system, and during those consulting periods of time, we actually have opportunity to come up with what I would call not sustaining, but really truly disruptive innovation, which is, for example, the case of selenium or sulfate treatment, where our clients had time to implement, so they had time for us to really develop a new treatment that would be suited for their projects. And basically this connection to the operations is really, really critical for generating the recurring revenue and continuing to basically stay ahead of our competition in terms of the IP. When you think about water and mining in general, there's basically, kind of three buckets of mining cycle or mining projects falling into three buckets of cycle stages. You have mines in development, you have active mines, and you have closed mines. When you think about mining, everybody thinks about the active mines, but every active mine eventually goes into closure. And also you have to keep in mind that not every mine that's or mining project that's being developed goes through, drilling, asset determination, permitting, all these bankable feasibilities. Not every one of these projects goes from development to being an active mine. So the sector, in terms of projects and in terms of the potential revenue from technical services, is quite large. And the timelines I want to highlight here is also those timelines are long. So when you look at the active mines, you would typically have base metal mines with a 20-year mine life. So once you have that mine in operation and there is a treatment facility, the operation of that treatment facility is not for 1 or 2, 3 years. It's typically for decades. For precious metals mines, it's maybe a decade. It's shorter mine life. But these mine lives are getting longer in general. That's the trend. The mines in development, they can span a lot of time. Like there was a recent stat that was presented by one of the executives of one of the major mining companies in the world, and he said that typically they are looking at 30 years between discovery of the deposit to putting the deposit into production. But for us, we typically get involved in projects, past certain stage of drilling and deposit definition. And so it's only 5 to 10 years typically for us. And finally, the closed mines are really, the closure can take decades. So these timelines are really long. And I guess the bottom line from this slide is that the market is quite large compared to, the size of our company. And so, we're not really a player that's has the ambition of, increasing market share to eliminate other competition. Where really the addressable market is so large that even if we double, triple in size, we're still playing only in a relatively small portion of the overall big market. Typical project revenue from the different stages. So we're looking at roughly $2 million in the technical services, advisory services over 5 years. Then when we get into operations, we generate recurring revenue, and that would be roughly $24 million over 15 years. And then finally in closure, typically for us, it would be only 5 years. Eventually the closure goes into less and less active treatment. And so we generate about $2 million over 5 years. And by the way, these are real numbers. They're, obviously it's very much project specific, but these would be typical averages. And, as you can see on the slide, most of our projects are sole sourced due to the intellectual property and unique expertise that we have. And we would generate about $28 million per project over 30 years. Most of that revenue being recurring, but upfront, the non-recurring technical services. We have established ourselves and our presence in all the key jurisdictions important to mining and metallurgical processing, which is North and South America, and as well as China. So we do have offices in Santiago, Chile, and we have an office in Hangzhou, China. These are really the areas for mining where the growth in new mining projects is expected to really satisfy the future demand of the world. It's not going to come from Europe. And while there's mining in Africa, that jurisdiction, we're not really, there's so many risks involved, we're not really involved in Africa. Over the last year and a half or 2 years, we've been recognized by the industry and the business community as well for all our achievements on both the technology development side and implementation, as well as just our commercial success of the industry. So there's quite a few news. You can pick it up on our website. In terms of our recurring revenue, so we basically have roughly 67% of our revenue is currently non-recurring, 33% is recurring, and most of it is linked to the production of clean water. So we charge basically tolling fees, dollars per cubic meter, or monthly fees for our services to the clients that are perfectly predictable and recurring, and they're always linked to performance. So we get paid only if we meet the effluent water quality or the treatment capacity. So that's the alignment with the interest of our clients, where we really put the performance guarantees up front, and we really get paid only if the facility performs. I just want to emphasize that the facility itself is still owned by the clients. There is a timeline of these recurring revenue projects, that just came online between 2021 to 2023, that was responsible for the run-up in the increase in recurring revenue. And these slides are just showing exactly what we talked about. So we've increased our top line, but also our both proportional and recurring revenue significantly. And I just have to explain that the proportional revenue includes the revenue from our China operation. That's a joint venture with Jiangxi Copper, where we still get paid not a tolling fee for treating water, but we get paid in the commodity that we recover, which is copper over there. We get 50% of the copper that's recovered by the plants that operate in China with that joint venture. And that really is what we call, it reports normally under GAAP as income from joint ventures. So kind of a bottom line, but here we also recognize it in the proportional revenue as our portion of the revenue of that joint venture. And then you can see that we've been increasing our working capital pretty steadily over the last 4 or 5 years. So we have a substantial working capital available to us. I guess we're pretty happy with our performance in terms of the bottom line as well. And the company has been growing overall, so it's really we're happy with where we are at. But as we always emphasize to Mathieu, our challenge is really managing the growth of the company. That's the biggest challenge facing us. I guess one of the things that I also wanted to emphasize was here, the graph on the right, where we look at our G&A as a percentage of our GAAP revenue. And as you can see, it's steadily declining. So that's the economy of scale for the company. As we, if you have 1 operation or 2 operations or 3 or 4, you still need to have a central group. So as you go from, you have your health and safety, you have management and overhead. And so as you continue to increase the number of operations, you don't have to increase your G&A proportionately with every plant. You have your central group already established for the first operation that you put out there. And so, we can see that our GAAP is, our G&A is a percentage as a percentage of GAAP is still coming down. And we expect that trend to continue. I guess the numbers that we're particularly proud of, when you look at the compounded annual growth rate over the last 5 years in proportional revenue, recurring revenue, adjusted EBITDA, and net income. That speaks for itself. We're also looking at, some catalysts moving forward that would accelerate the valuation of our business. Those catalysts are either company maker projects that would be maturing in our project pipeline, and/or general consolidation in the water and environmental services in our sector. I think that our value is really protected also by the fact that we're in the environmental sector of the mining sector, and that really separates us from the commodity cycles. Even if you believe in the boom of commodities, they will come down again in price. But our water treatment projects are happening regardless of whether the copper price is $3 a pound or $6 a pound. A little bit about the company maker projects. There are large-scale projects in our pipeline, we call them company makers because they are so large. They can contribute significantly to our top and bottom line compared to our existing projects. Or historically, when I was showing the averages, these would be significantly higher than these averages that I talked about previously. Now, we have several of them in our pipeline, and what's important to note is they're not necessarily wishful thinking or blue sky here. They're really projects that we've been working on already. We've been providing our advisory services to the clients on those projects in the past 12 months. They've been paying us to work on them. Most of them have very long lives, operating lives, in excess of 30 years. So the potential for generating long-term recurring revenue is quite high. And all of these projects are environmentally driven, with also very strong social acceptance being a secondary driver. So again, these are not projects that are driven by the need to recycle cyanide or recover metals. These are really driven by regulations and social acceptability. Strong drivers. The second catalyst for increasing our valuation I mentioned is the consolidation in the sector. And I realize this is a lot of information in one slide here, but basically what we see is there are either in our sector of water in mining, there are either small players like ourselves, or there are these super large companies that are either the multidisciplinary global consultancies such as Stantec, WSP, Tetra Tech, or the Walmarts of water treatment such as Xylem, Evoqua, or Suez Veolia. Now, these very large companies cannot service the sector properly because the typical size or capital cost of a water treatment project in the mining sector would be roughly $30 million. Now, these large companies are making money on now I'm talking about the water companies. They are making money on volume, right? They are mostly going after the municipal sector, desalination, sewage treatment, cookie cutter kind of projects. In mining, you need to really customize. Every site is different. Every water is different. Every receiving environment and permit is different. And that customization really creates a barrier for success for the large companies, in addition to just sheer size of these projects. So if you have a $30 million project, Veolia would not even look at it. It's just too small. And then you have the consultancies, and they typically they are the ones who are involved in the entire project. So they're building out the mine, they're building the tailings dams. So a build out of a mine these days is definitely over $1 billion typically. And again, the water treatment facility is only $30 million. So again, these consultancies get into projects because they're building the infrastructure, and quite often they get into water themselves, but they have no intellectual property. They don't get involved in operations. They don't want operations. And so the whole the sector is really underserviced by them as well. And so what we anticipate is some kind of consolidation that's going to happen, where some of the small players will probably be, there's going to be a bulk up in size and some kind of entity that can service the sector efficiently and be aligned with the interest of the mining companies will very likely arise in the near future. We talked about the protection of value. With BQE specifically, where we have proven commercial strategy, we have unique disruptive technologies that are proven on industrial scale. So those risks are not there. We're already generating significant recurring revenue, yet and also to be increased. That is unimpacted by economic cycles. We have the capability for continuous IP growth, and ultimately our business is fully aligned with the values and priorities of this century, meaning social acceptability, meaning environment, clean water, all those boxes we are ticking. And I guess this slide just confirms that. And in terms of risks, again, we feel that, for a small company, really MicroCap, when you look at, the whole space of microcaps, there's lots of risks with different companies. And I think that we really eliminate a lot of these risks that are listed here in terms of, our business itself, the commercial strategy, the technologies that we have, and also our name already out there. So we are an established player. We've been around for a while. So in terms of our customers, customer retention, all of that record is already there. And so we're not trying to prove ourselves in a sense. Also want to mention excellent team that we have. Really the greatest asset the company has is its people. And, as you can see, we've got quite a few individuals that are relatively young. They've been with the company for a long time, especially going through the hard times that we had, between 2013 to 2015. And they've really, that going through that hard period really gelled the team together and created the culture that we have in the company. So I'm super proud of having that team. And we're here to answer your questions. Thank you.
Excellent. Thank you very much for all that information and for sharing the presentation. We'll move into the Q&A portion of the business breakdown now. I'll kick it off, and then Mathieu can chime in, and I'll pass it along to him for some questions. You mentioned some industry consolidation as being sort of a tailwind for you. That typically usually happens on the back of change taking place in the industry. So I'd be curious, maybe a good place to start would just be to get your take on how the industry has changed from when you started in terms of what's important to your customers, or even how water is treated among your customer base.
Yeah, and that's an excellent question. There are fundamentally long-term trends that I've observed over the last 25 years that I don't see them changing, and they're definitely affecting, or they're definitely pointing towards this consolidation happening. One of the trends is in the regulations. So let's say 20 years ago, the engineering companies were able to provide sound technical solutions to the industry in most cases. I'd say probably in 80–90% of the cases, the Stantec's, the Tetra Tech's, they could provide good technical solution to mine water treatment because the regulations were lax, right? So specialty knowledge and innovation was not required. These days, it's almost impossible in certain projects, and the large multinational consultancies themselves, they are not set up for innovation. They're not set up for doing something that hasn't been done before or addressing new regulations. Their business is man hours and engineering. So they want to be designing plants, but they don't have the know-how, they don't have the expertise anymore. And their business model is not set up to really service the sector either, addressing the risks, therefore. So if you have new regulations that need to be addressed by new treatment solutions, those solutions have to be proven. Somebody has to guarantee them. Somebody has to put their skin in the game. And again, the engineering companies are not going to do that. So that's, the regulations are driving this. Second aspect is that the innovation itself, the mining companies are downsizing everything that's non-core. The only thing that I see that they're retaining is their internal metallurgical mineral processing and geology, data processing. That know-how and expertise is critical to their business. That's their business, is winning metals out of water, out of ground, out of rocks. But anything that's external to that core expertise for the mining companies is really being outsourced. That's the trend that I see in the long term. All of the mining companies used to have their research and development centers, R&D centers. Barrick had one. There was one in just outside of Montreal with Noranda, gone. Falconbridge with now Glencore, outsourced, gone. So all of these R&D centers are gone. So the innovation that's needed is not going to be done by the mining companies. It's not going to be done by the large multinational consultancies. And it's not done by the Veolias either. They're not investing in R&D in the mining sector, right? And so I feel that these two trends are really, and the need for customization, project by project, they're really forcing the smaller players to take on more responsibility, step up, come up with the innovation, come up with business models to really help the sector grow. And, I think that ultimately, the larger companies really prefer larger entities to do business with. And so it's just a natural push for the smaller companies to consolidate into a larger entity. And obviously, throughout all of this that I was saying, risk management is huge, right? So working with a larger entity that has larger treasury, working capital, is preferable to the mining companies. And it's also good for, the service providers themselves, because the larger they are, they can service multiple clients at the same time. They're not dependent on completing one or two projects at a time. So I hope that this answers the question.
Excellent. Yeah, before Mathieu goes ahead, I just want to reiterate one more time for participants, if you have a question and you'd like to submit one, just click on the Q&A box at the bottom of the Zoom screen, and we'll get to the questions after Mathieu gets through his question set.
All right. So I'll start with the first one being on the intellectual property that you have developed over time. You showed a slide with your 4 core technologies. Is there one area where you feel like you're stronger, or maybe there's more growth opportunities going forward, or maybe even one where the economics are a little bit better for BQE?
Yeah, excellent question. Matthew. So there's definitely areas where our intellectual property is stronger than in other areas. And probably the strongest one is selenium, because in the selenium treatment, we're the only commercially proven non-biological system out there. And so that's huge. That really is a very strong IP position we have in the market. I feel that in terms of economics, you know, we don't win selenium projects based on economics. And therefore, the addressable market for us is really market where the clients need to meet super low limits and they cannot deploy the alternate biological solution. So the price in those cases, you know, competition on price is not the driver there, which when we compare ourselves to biological, I can imagine there are projects where the biological treatment may be cheaper than us. But there are also sides where, you know, we would be cheaper. What I'm trying to say is I see the driver for selenium, the addressable market for us, really driven by the technical performance, the value that we bring in, you know, all the things that we can do non-biologically that you know, outperform these other systems. And we can talk about specifically what those criteria are.
Well,
in terms of the cyanide, that's the opposite. I feel like people try to do cyanide themselves quite often and fail and come to us to fix it. So our intellectual property, perhaps in the initial stages of the projects, is not as strong, but those projects are really very strong economic drivers because, you know, the recycling of cyanide has phenomenal economics. We have a project, there was one project in Turkey where literally the payback on the investment was on the order of 3 to 4 months. You know, so if you have a gold mine that's going to be there for 10 years, it's absolutely phenomenal payback. And it enables the mining companies to actually mine the ore body and recover the gold if they recover cyanide. If they don't, sometimes they don't have a project. So that's an example of IP that perhaps in the initial stages, people think they can do it themselves. It ends up going to us. But it's super strong in terms of the economics and the viability of the system. So maybe those two I would highlight as two opposites of the you know, buckets of our IP.
Yeah, David, if I can add to it, or Matthew, if I can add very quickly, you know, imagining most people on this call are not seasoned in the technology or whatever. You know, David mentions, you know, we're the only non-biological answer out there, and the reality, you know, in the biological systems that were being used by the industry, there was really some inadequacies there, a lot of different inadequacies, but it was the only system available. And, you know, with what we do, David talked about eliminating waste. One of the things is when we deal with selenium, we create a product, not that we can sell, but we can give away. So that is one of the areas where we're zero waste. But there's also the other, you know, in dealing with it biologically, they have often create other problems. They turn non-organic selenium into an organic form of selenium, which bioaccumulative in the fish and whatever causes a problems. But there was no other answer to that, what they was doing. And the other point as well is with biological, you have to, they're bugs. You have to keep them alive all the time. They take a long time to do. You can't turn them on and off. You can't, that's it. You know, if they're in the northern part of Canada, you have to keep the bugs alive during the winter where you've got no winter water, everything is frozen. You know, we actually have plants working now where we can turn on at 9 o'clock in the morning, turn off at 6 o'clock at night. You know, so we can deal with any water temperature, we can deal with anything, things that biological just can't do. So it is, you know, we don't use the word lightly. It really is disruptive to the current way of treating selenium. And apologize for jumping in, but just I wanted to do that for any lay people on the call. You know?
No, that's perfect. That's really helpful. Can you talk about the switching costs for your customers? Let's say you design a system, you get involved with technical services initially, and then that moves into operations and recurring revenues. Are customers really locked in for decades, or can they switch providers? How does it work?
Yeah, so we try to get the initial operation services agreement for as long as we can, but typically we would end up with 3 to 5 years. And the mining companies themselves are really, they very seldom would consider anything longer than 5 years, not only from managing their own perception of risk, but quite frankly, they don't know, like when you enter into scope of services and you have certain type of water you're treating, chances are that in 5 years, the water is going to change and the mine's going to change. And so they don't want to lock themselves in for extended period, which is understandable. The point is that once we get on site and operating, there are several drivers that really make it difficult for the company to switch. Once is, you have a party, all of these systems have their own idiosyncrasies. They have their own things that we optimize and improve every year. We're not really just following a recipe that just stays there day by day and year by year. We're actually constantly improving and adapting the treatment. And a new party that comes in does not have that operating history. So if you don't have operating history, you don't have the continuity, you're at a disadvantage. And the mining companies know this. I think that our record so far shows that we haven't yet lost a client where we started operating. We've always renewed. I think some of you have seen the press release that just went out recently about us renewing with Glencore again for the Raglan project. And we've been there for 21 years. So I'm not saying it's impossible to replace us, because ultimately what we do, we give the clients the intellectual property license to the intellectual property once we get the first operating agreement signed. So they technically own the license for that particular plant, that particular project, and theoretically they could go to another party to operate it. But in reality, we find that as long as we do a good job, the renewal will, they're strongly incentivized to stay with us.
All right, perfect. Can you share a little bit more details on the company maker projects that you alluded to at the end of your presentation? I'm curious to know what sort of visibility do you have on these projects? Maybe if you can share some maybe expected timeline, or just set some overall expectations for these large projects.
Yes, certainly. Again, I'll try to share whatever I can. Obviously, it's confidential, but the details are confidential. But in general, we consider there are 3, and we have, I'd say, the visibility on the first one is it's something that we should know whether the project is moving ahead or not by the end of this year. And we would certainly start seeing additional revenue on the technical services side, because it's going to go through the technical services side first next year, if that moves ahead. Again, it's driven by regulations, and it's in North America. Second one is also in North America. So I would say the first one, going back to the first one that we should hear about by the end of the year, is linked to an existing operating mine that would go through a major expansion and long-term operation in North America. The second one is a project in North America that's a very large deposit of gold and copper that's in development. And the project secured permits using our treatment technology, including selenium treatment. So that we're basically locked in. If this project moves ahead, they have to move ahead with us. And they've secured the approvals for the project. The question is there going to be sufficient, financial support for the project, which is dependent on, on our client side, finding the sources that are available for the development. But because of the asset is so unique, we believe that again, if the commodity cycle moves in the direction that a lot of people anticipate, this is one of those projects that's going to move ahead, because you don't have many projects that are shovel ready, that are major deposits ready to go because they're permitted. So that, in my view, is the time horizon of, let's say, 2 years, where this project would go in stages and would be, again, very long. So the mine life of that one is projected to be 50 years. And then the third one is in Latin America. It has arguably it's the slowest burn. It's with a major metal producer, regulatory driven, but the regulation enforcement is, I wouldn't say somewhat lacking, but compared to the North American projects, is definitely less. There's less pressure on the client. And it's also probably the more capital intensive one. And so we feel that that's probably the slowest burn. And, I would give it the time horizon of 3 to 5 years.
Okay, thanks. That's very helpful. Now, you've been profitable for several years. You've been building cash on the balance sheet. Currently, you have about 8 million in cash. What are the capital allocation priorities going forward?
So I think there are several aspects here. One is we always wanted to maintain a certain cushion in our working capital, understanding that we may go through cycles in the sector in general, but also, as you noticed, our financials quarter to quarter, there's still fluctuations related to the lumpiness of the technical services, right? So the technical services are contracts that are relatively short in duration. Some are 6 weeks, some are 3 months, some are half a year, and they're on off, and can be lumpy. And so we wanted to maintain certain level of working capital that we don't have to worry about any of these fluctuations in terms of the ability of the company to maintain staff and continue our own R&D work. But at the same time, we are past that, or we're past that point, and so we're actively looking for deploying our cash in potential M&A, and there are two aspects to it. One is really related to broadening. Well, both of them are broadening our services. So we're looking actively now for companies that are a good bolt-on to our existing services. They're in the same sector. That would give us, one is on the area of discipline engineering, where we don't typically do electrical piping, mechanical. But some of these services we can easily wrap around ourselves, and we don't have to use the other engineering firms. We see how much money they're charging and how much money we're leaving on the table. So that's one area we're currently looking. The other one is in the area of aquatic toxicity that nicely bolts into our operations, where we actually have to meet not only water quality limits at the end of pipe, but also the fish toxicity biological testing criteria, and having expertise in the toxicology gives us that. Plus, it also gives us an opportunity to get involved into projects early, because the toxicology is a crucial part of the environmental assessment, baseline assessment, for the very early stages of new projects. So it gets us in the door with new clients very early in the stage of development of new mines.
Yeah, I think I would add what's really important there, Matthew, is one of the things is our team lived through the hard times when we took this company, in its new strategic direction. The company was losing a tremendous amount of money, and obviously, as you've seen on the slides David showed, we turned it around. But the other thing that's important, so we are cautious, and we want that cushion just in case, and hopefully we never need it. But secondly, is we're not going to reinvent the wheel with anything we look at to purchase. We're only going to look at things that are already cash flow positive in them areas that David mentioned. We don't need, we've done enough reinventing the wheel with our own business. We don't need to do that with anybody else's. So these things will be, cash accretive straight away to what we're doing,
Yeah, that makes sense. Okay, I think we have time for one last question before we wrap up. So, you released your Q1 results last month. Recurring revenues were up significantly, over 100% growth year over year, but total revenues were slightly down. So just wanted to give you an opportunity to maybe comment, provide some color on the quarter, and also maybe if you could touch on some of the seasonality or lumpiness that investors should expect going forward.
Yes, certainly. And thank you for the opportunity to talk about it. I think in all of our MD&As, we are highlighting, for all investors to consider BQE Water as an investment, or to judge the performance of the company not based on quarter to quarter. We're still a microcap after all, and we do have a significant exposure to the technical services that are non-recurring. So there's going to be some lumpiness related to the non-recurring services, as I mentioned. There are short-term contracts. We are not in control of when these projects move ahead to the next stage, and when they get postponed or delayed, as is the case currently. One of the reasons why the technical services were lower in Q1 is that there were a couple of projects that we expected to start, and we had available engineers to start working on, but they got delayed. They're not canceled; they're delayed for reasons that are outside of our control. And so I think one source of lumpiness is this non-recurring revenue and lack of control over when the clients move ahead with projects. But that lumpiness should decrease as our recurring revenue, the one that's easy to predict, grows. On the recurring revenue side, there is also lumpiness that will be reduced over time, and that lumpiness is caused by exposure of our operations to basically water levels, meaning weather. It's driven by precipitation. It's driven by winter versus summer. So as Peter mentioned, some of our operations in the Canadian subarctic, water is frozen. We don't treat water in Q1. And then there is a deluge of water that comes in at the end of Q2, Q3, especially, is lots of water in Q4. And then we have operations, let's say in China, where the mines are in monsoon areas of dry and wet seasons. So the December, January, February is the dry season. And then as you move into April, May, it starts to get into active rainy season. And there is a couple of changes through the year. And so we see this lumpiness related to weather. And that should diminish with more plants coming online in areas where the water flows year-round, or is available year-round. One of the reasons why we we had a major increase in Q1 on the recurring revenue is because of the projects in Arizona came online. And although it's not necessarily that in Arizona there's lots of water all the time, our contract is structured such that the majority of our fees are fixed fees, monthly fees. So there is some, element of water volume, but it's not as we're not exposed to, the sensitivity to volumes, and so that stabilizes that fluctuation year round. And the expectation would be moving forward that understanding these risks, with water availability and seasonality, our operating agreements are structured such that we try to minimize that fluctuation. So overall, the fluctuation is going to be there quarter to quarter for foreseeable future, but it should diminish as we grow.
All right, perfect. Well, thank you very much for answering the question. I'll pass it back to Adam for closing comments.
Yeah, thank you, Mathieu. That seems like a great place to end it for today. I just want to thank everybody involved in today's business breakdowns, including BQE management and Mathieu for participating. Thanks also to the community and everybody who joined for today's breakdown. We'll be posting a recording of the webinar later today on MicroCap Club. So thank you again very much, David, Peter, Heman, Mathieu. Really appreciate it, and have a great rest of your day.
Thank you. And if anybody has any further questions, please feel free to reach out. So we're happy to answer.
Thank you very much for organizing it. Appreciate it, Adam and Mathieu. Thank you.
Same-wise. Thank you.
Guys.
Thanks, guys.
Thank you again. Take care.
Yeah.
Bye-bye.
Bye.
Bye-bye.